Okay guys, so today we're gonna learn how to master the bearish and the bullish flag in crypto trading, be it the crypto or be it the forex market. All right, so mastering the bearish and the bullish flag pattern, you need to understand how the flags pattern works, the bullish flag, the bearish flag, and how the flag is being formed, the breakout, the retest, and so on and so forth. So we have the key elements to identify flag patterns. All right, so the price action, the volume dynamics, the breakout confirmation, the trading strategies and risk management, your exit and entry point, the measured moves, supporting indicators, and so on and so forth. So these are the things you're gonna learn today concerning the flag patterns. Understanding flag patterns. So this is the bullish flag pattern. Okay, a bullish flag is formed after a rapid upward movement, that's the flagpole, followed by a brief tight consolidation that usually trends slightly downward or sideways. So this is the consolidating area. As you can see, this is actually trending slightly downward, okay? And this is the pole. As you can see here, this is the pole, and this is the consolidating area. This pause indicates that buyers are simply regrouping. A breakout above the consolidation zone confirms that the upward trend is likely to resume, presenting a buying opportunity. So as you can see in this bullish flag, that this is a rapid upward movement, which simply means the buyers had more strength than the sellers. Okay, so the buyers actually give us the previous highest high before we have this recent highest high here. This is the previous highest high before this market actually played out in a bullish trend. Okay, always pay attention to it, and as you can see, here is the breakout. This is the breakout, so you looking out for your buy entries here. All right, so as you can see that the flag is a very valid bullish flag. Bearish flag pattern. So this is the bearish flag pattern. Conversely, a bearish flag appears in a downtrend. It starts with a steep drop and is followed by a brief rally or sideways movement that forms a compact flag. Okay, so once the price falls below the flag's lower boundary, it signals that selling pressure is set to continue, all right, offering a chance to short or exit long positions. So what do we mean by short and long positions? All right, so the long positions is the buy and the short positions is the selling positions. All right, so when you understand all this, it will be easier for you to identify the bearish and the bullish flag pattern. All right, so as you can see, this is the steep drop, all right, and it's followed by a sideways consolidation. All right, so as you can see, this is the consolidation area. Okay, and before the market actually break out at this point and went down for a short position. All right, so this is an example of the bearish flag pattern. Just identify it as this is the pole and this is the full flag. All right, so just like the name states, flag, we have the pole and we have the flag. So this consolidating area is the flag and this is the pole of the flag. All right, so we're going to dive into the next one right now. Key elements to identify flag patterns: we have the price action and we have the volume dynamics. All right, so the price action, look for a strong nearly vertical move, which is the pole. All right, this flag pole. Okay, followed by a well-contained consolidation phase, which is the flag, and this is the flag. Okay, so consistency in this pattern strengthens its predictive power. So what does that mean? It simply means that the more this consolidation area repeats itself, all right, shows the stronger the pattern is. Okay, so when you have this like this consolidation playing out, it goes up and goes down, it goes up, it goes down, all right, giving you the point whereby when there's a breakout you should go in for your buy. All right, so I will be showing you exactly how to still trade it, but it's not advisable to just trade using just your trend line, and to know when the breakout occurs, you need to combine other indicators. Okay, so just like the volume indicator. All right, so number two is the volume dynamics. Volume typically surge during the initial move, all right, and then tapers off during the consolidation. Okay, so this is what we mean here. So when you have something, your volume looking like this, all right, at this point, let's say at this point, and you see there's a breakout here, all right, at this point you should know that the market is about to start buying. All right, so taking a trade at this point here will give you a good amount of money. All right, so you'll be making a lot of pips here. So this is how to trade the flag pattern, but I wouldn't advise you to use only your trend line and the volume indicator to trade the flag pattern. All right, in other class I will still show you how to analyze more using other indicators, okay, and how to identify a very valid flag pattern. Okay, breakout slash breakdown confirmation. For a bullish flag, a move above the upper boundary is the signal. Okay, for a bearish flag, a decline below the lower boundary confirms the trend. All right, but this here we have is a failed flag. All right, so this is meant to be a bullish flag, but it actually did failed. Okay, this is the reason why I said that you don't have to use just your trend line and your volume indicator to trade your flag patterns. Okay, you need to combine with a lot of indicators, and when you have a very valid confirmation, you can be able to go in for your trade. All right, so there's something you need to understand. All right, so this is a very long pole. All right, so the height of the flag pole can then be projected from the breakout point to estimate the potential move. All right, so when you have this kind of a long pole, there's a lot of fair value gap that needs to be taken out from this point. All right, there's a lot of things you need to learn. So it's not just all about having your flag pattern, you still need to understand when and where to enter your trade. All right, so however, in some cases, instead of breaking upward, the price breaks down sharply through the lower trend line, a failed retest of the broken flag where the price is unable to reclaim the pattern, further confirms the breakdown and invalidates the bullish setup. All right, so this invalidates the bullish setup. This was supposed to be a very good trade. All right, so you might have tried to enter your long positions here, and we have this reversal here, and it actually did fail. Okay, so this is the reason why you need to combine other indicators as well to be able to achieve this. Trading strategies and risk management. All right, so this consists of the entry and exit, the measured moves, and supporting indicators. Okay, so enter trades only after the flag pattern is clearly confirmed. So what does that mean? You shouldn't just jump into entering the trade without having your clear confirmation. All right, either through a breakout above the upper boundary for the bullish flag or a breakdown below the lower boundary for a bearish flag. Jumping into early before confirmation exposes traders to false signals and potential whipsaw. You should always know that the market actually do tests. All right, so there's this stuff the market actually do. It actually bring in the traders who are too desperate to actually go into the market, and it does take them out. Okay, so you need to confirm your pattern clearly before you go into your trade. All right, to manage risks effectively, place stop loss just outside the consolidation zone below the lower trend line for bullish flags and above the upper trend line for bearish flag.